Welcome back to BLOCKTV. Well, recent global turmoil linked to the coronavirus is causing systemic panic across markets. While when 2020 started, many had characterized it as the year institutional investment was going to take hold of the digital asset space. Now, this narrative is very much in question. Scott Freeman, partner and co-founder at JST Capital, joins me now, a financial service firm specializing in the digital asset marketing, servicing institutional investors. Scott, firstly, thanks so much for joining us.
Great, Asher. Thanks for having us. I appreciate the time.
All right, so Scott, let's start with some macro trends right here. Throughout 2019, we saw this big push towards institutional investment in the digital asset space, particularly in the wake of Libra and the announcements that came with the Libra sort of direction, everything that came out of that. Well, I guess the question I have for you then is, Scott, now that we stand here a few months into 2020, what does the institutional outlook in the digital asset space really look like?
Well, I think we still see continued growth, Asher. I think more and more people are getting interested in this space, but I think we need to think about there are different spaces within the crypto ecosystem. So, for example, we do see more and more institutional investors, family offices, macro hedge funds who are putting their toe in the water and are more interested in having a position in Bitcoin or some of the larger cryptos. But we think more systemically, we do see a big growth in what we think about as stablecoins, which is asset-backed coins. We hear a lot of central banks. We're working with some of them who are issuing stablecoins or looking at the market. We do think that Libra inspired a lot of that and pushed people to be more thoughtful about how to go after that market and the need to go after that market. So we do see that as a big growth area for this year and next year.
So you mentioned stablecoins there. I do want to get back to that, but I want to touch firstly on the use of established digital currencies and cryptocurrencies that exist at the moment, particularly looking in at Bitcoin. Now, obviously, there was the narrative for a long time in the Bitcoin space and inside the crypto space as a whole of saying that Bitcoin could function as a sort of digital gold, a safe haven sort of location for businesses who wanted to hedge against volatility. Others called it an uncorrelated asset as another means to hedge against potential volatility. Now, with the coronavirus, with the oil shocks that we've seen so far, certainly that volatility is here. Are you seeing institutions take on Bitcoin as that hedge, or is that narrative sort of fallen apart?
Well, it's a great question. I think traditionally, people have looked at Bitcoin as an uncorrelated asset and has been totally uncorrelated. I think what we've seen in the last few weeks, especially with the sell-off in the market, we have seen a sell-off in Bitcoin as well. So in the last week or two, I think they've been more correlated. But people have always asked me, people have been calling us all week about the volatility in Bitcoin and what we think. And honestly, 10, 15% move in Bitcoin happens every quarter. We get 4 or 5 of those a year. So for us, the volatility is normal. We expect volatility like this. We react to it. It's something we've seen before and we continue to see. It is not typical for other markets. So a few things. I think we have seen correlation in the last few weeks, but we do not expect that to continue. We do think that Bitcoin should continue to trade and be viewed as an uncorrelated asset.
All right, but I mean, that fear of volatility that you mentioned just there, obviously those inside the space and inside the sphere who are comfortable with that volatility may be used to it. But I imagine some of those big institutional players that you may be in contact with would see some trepidation over that, whether it is part of normal trade or not, to put money into that and sort of get off zero, as many in the industry like to say, when it comes to buying into the digital asset space.
Yeah, I know. And listen, we advise all of our clients that if you're getting into this space, we advise anyone, honestly, you've got to expect the volatility. You can't get into this market and expect to get out of it if your asset is down 20%, because that literally could happen in a week or two or a day or two. So people who are getting into this space need to expect volatility. But honestly, most people want the volatility. I mean, you don't get into crypto unless you're comfortable with volatility, because that's what you have. And before last week, volatility across the globe and every other asset was really low. So people who were seeking volatility, who were seeking return, tended to focus on the crypto space. And we do think that will continue. We do think volatilities in equities and other assets are inflated right now. I think once we get through this corona scare, volatilities in those assets will continue to come down and go back to historic levels. But we don't think the same will happen for crypto. We think crypto will continue to be a volatile asset, and people who are comfortable with volatility will still migrate and use it as a way to express that interest in volatility.
So in terms of that, expression of Bitcoin, particularly as we head towards the halving event around mid-May, you think it still will be considered in terms of its volatility and the way institutions are looking at it as that relative risk-on asset compared with other assets, and other other asset classes that exist despite volatility that we're seeing right now. This is just short-lived.
Agreed. Yeah, we do expect that, and we do expect the continued growth in the derivatives market in cryptos, especially Bitcoin and Ether and Ripple. We see the increased growth in options, and people are using options to express their views on volatility. And there are more and more futures exchanges and derivative exchanges coming on board. We think all that will just make it easier for people to take advantage of that volatility.
Okay, an interesting one to watch out for. But I want to now turn back to that stablecoin conversation that you touched on earlier. Now, stablecoins have undoubtedly been a growing and more appealing asset space, particularly in the wake, as we mentioned, of the Libra announcement, now central banks getting on board with the idea. But there are still problems, difficulties, and limitations within this space, whether we look to the private or public sector to develop the stablecoin industry. No doubt there, where you are in New York, Tether, the biggest stablecoin out there by market capitalization, its parent company Bitfinex, still undergoing investigations by the New York Attorney General. Those investigations ongoing. Obviously, taint a bit of the views that maybe institutions are having of the stablecoin space. What are the sort of trends you're seeing when it comes to institutional investment in regards to stablecoins, and where do you see those trends, sort of the macro trends playing out there?
Yeah, I think a few points. We're seeing a growing demand amongst commercial banks, especially in emerging countries. So you can look all throughout the Middle East. We can look all throughout Latin America, where central banks and the major banks in those jurisdictions are looking to use stablecoins as a way to increase deposits, as a way to more smoothly facilitate cross-border transactions. And we think those trends continue. We think the technology behind the blockchain facilitates it just makes it easier to settle offshore transactions much more quickly. So we see a lot of growth in that space. We think every commercial bank needs to have a strategy around how they're going to react to this, because it is very easy to use stablecoins as a means to collect deposits. We do think over time people will start competing over the interest you can earn on these deposits. So much like banks today compete over interest, this will make it more transparent. So banks will issue stable coins and will compete over interest, just like they compete over interest today. So we think that'll be a major trend over the next few years.
I mean, you spoke about the development of stablecoins, particularly from central banks around the world, in Latin America and Asia, but there in the US, certainly there has been calls that some of the regulation around how new coins could be developed or put out there, whether by private interests or by the public. Certainly we've heard from Federal Reserve Chair Jerome Powell that they're not in a rush, as well as Treasury Secretary Steve Mnuchin, that the US administration is not in a rush to push towards some sort of US dollar digital asset. Do you think that the US risks being left behind in this front, and will people turn to other countries and institutions turn to other countries for those sort of developments?
I used to work at the Federal Reserve here in New York, and it doesn't surprise me that they have no interest in supporting a US stablecoin. But I do think people should focus more on commercial banks issuing stablecoins instead of central banks, especially in the US. So I don't think it's a big deal that the Fed or Treasury are not going to issue a US-backed stablecoin. I do think it's more important. You've heard JP Morgan made an announcement that they're working on their own stablecoin, and I expect that every major commercial bank in the US is doing the same thing. They have to, right? It's just a matter of when they issue it and how it's being used. And I think the Fed will serve its purpose, and they'll oversee the banks. They'll make sure the banks are operating in a safe and sound manner in how they issue stablecoins, manage the risk around stablecoins. And I think that's the way the market will develop in the US.
And you don't see regulation there in the US potentially holding back the development of any of those private stablecoins?
I think it's still a bit opaque, but I'm guessing JP Morgan has done it. I'm guessing they've talked to their regulator about it. The regulator, they wouldn't be doing it if their regulator hadn't approved it. And I think that sends a signal to every other commercial bank that, yes, you can do this if you want. There are hoops you probably have to jump through, but there's no impediment to doing it in the United States.
And lastly, Scott, I wanted to ask you, I mean, we touched on coronavirus fears, oil shock fears, and dangers that are happening there, but I want to talk from the regulatory side, how this may impact the outlook for digital assets, cryptocurrencies in particular, into the medium and long term. We've obviously seen the Federal Reserve make that emergency rate cut last week, 50 basis points down. There's considered that there'll be further rate cuts in the weeks and months ahead. With these sort of policies looking to expand liquidity coming out of the U.S. Federal Reserve, do you perceive that there may be an uptick generally in particularly Bitcoin, but let's look at the cryptocurrency space as a whole into that medium and longer term as a hedge against that sort of rising liquidity?
Yeah, we do think so. And we think that the growth of platforms to earn interest on your crypto will also facilitate that growth. So in an environment where if you own a hard asset, whether it's a bond or an equity or just a deposit, and you're earning 0 to negative interest rates on those, Bitcoin looks a lot better, right? If you can buy Bitcoin and invest that and earn 3, 5, 10% on it, it makes that asset look a lot better. So I think that it makes it look more just as a better investable asset. And I think the extent to which U.S. interest rates go negative helps Bitcoin and crypto. And honestly, we would have thought that crypto would have risen with this as well. Like the fact that U.S. interest rates are so low and will continue to go low, we think is overall good for the crypto market.
It's certainly an important conversation to watch to see how that does develop in the medium and long term. We haven't seen what we expect in the short, but there's still plenty of time for that to play out. All right. Well, Scott Freeman, I want to thank you so much for taking the time to speak with us today. Really appreciate getting that institutional view and space. It's important to see in the crypto space as it grows and develops. So thank you so much for being with us. And those watching at home, stay with us at blocktv.com for all the latest in news and information. I'm Westropp-Evans. Thanks for watching.
Watch us on Amazon Fire TV and Roku.